Ladies and gentlemen, my name is Andrew Stotts, and I want to welcome you to this Valuation Masterclass Bootcamp presentation. Before we get into it, let me just introduce you. Today's presenter is Superkit, and he is going to be presenting about Microsoft. This is week 8 in the Valuation Masterclass Bootcamp, just 4 more weeks to go, and he's put in a tremendous amount of time and effort to get to this point. Keep in mind, all of our students start from the point of 0 in some cases, but a minimal amount of experience. So if you want to build a competitive advantage in company valuation, like Superkit and other students, join us at Valuation Masterclass Bootcamp. And also, just to note, for the next 7 days, scan that QR code or go to valuationmasterclass.com/bootcamp, and you're going to get a $1,900 discount for the next bootcamp that starts in 52 days. So I look forward to seeing you there. Well, let's get into it. Hold on. I'm going to bring Superkit in here.
Hello, guys.
Yeah.
Yeah,
Time to rock. How are you feeling?
very exciting. Little bit
Yeah.
stressed, but I think I'm ready.
I'm sure you are. And I know you've worked really hard on this. So I think what I'm going to do is I'm going to first share the screen. So 1 second. All right. So now we see the Microsoft screen up on our projector. So I'm going to remove myself and then you're going to take it away. So you ready to go?
Yeah.
All right. I'm going to remove myself now so you can start now.
Hi, guys. Today I have interesting stories about a company that everybody thought is going to be dead in 2014, but it's come back. Microsoft, the old age company, still can't sprint. Hi, my name is Superkit Amonwet. I initiate coverage on Microsoft with a buy recommendation based on a target price of $572, implying upside of 14.5%. I derive my target price from free cash flow to firm valuation using WACC of 10.6% and terminal growth rate of 4%. And the highlights are synergies from AI and cloud investment drive core business. The fastest data center expansion, but not enough differentiation. And the last thing is lower gross margin, greater operating leverage with a shift to capital intensive. Risk that this company faces intense competition, shift to a higher fixed cost, cybersecurity, and regulatory problems. Now, Microsoft is a diversified technologies leader with a dominant 20% of cloud market. Business have 3 segments that they build on. First is productivity software like Office 365 with a powerful intelligent cloud unit led by its Azure platform and broad consumer presence through Windows and Xbox and search. And Microsoft AI and cloud investment unlock long-term synergies. Synergies from AI and cloud investment drive core business. With the recent investment from Microsoft, we could see its great integration with AI and cloud. In example, Office product with Copilot update, increased productivity for consumers and corporate, bringing together chat, search, and agents. Increased demand for subscription with 100 million monthly active user and 800 million monthly active user, all AI product across the company. And average revenue per user also increased with the cloud storage value added to it. This drives 18% fiscal year 25 revenue growth. And we could see another great cloud utilization with Xbox Game Pass, letting people play any game they want without having great computers. They could playing through internet to their cloud. I expect these new technologies to let people have AI and computing power to build and create without the need to spend $1 million to achieve what used to be impossible. I expect overall Microsoft revenue to grow at 19% 5-year CAGR. The second story is that the fastest data center expansion, but not enough differentiation. Microsoft is the fastest new data center expander with 2 gigawatt expansion in fiscal year 25 to support its high demand for AI and cloud computing. Azure Hybrid Cloud function mix public and private cloud, giving flexibility to corporation. With Nestle, migrating 1.2 petabyte of data to Azure is the largest in the business history. And the AI infrastructure called Foundry, with AI model from OpenAI, DeepSeek, and Grok, used by 14,000 customers and 80% Fortune 500 companies. That's fascinating. To create agents to handle complex tasks, Foundry APIs process over 500 trillion tokens, 7 times year-on-year, lead to cloud revenue growth 35%. And Azure still have no differentiation compared to AWS and Google Cloud with its exceptional performance. So I expect market share to stay at 21%, and the cloud revenue section grow average 25% for the next few years. And the last story is that lower gross margin, better operating leverage with a shift to a capital intensive. Gross profit margin stay flat at 68% in fiscal year 25. Shift to Azure product mix lead to lower gross profit margin due to AI infrastructure scaling costs. Operating margin operating expense grow only 6% versus 15% of revenue growth, showing a great operating leverage and management care about operating efficiency. And the recent shift to the company capital intensive business with capital intensity ratio of 0.8 times versus 0.4 times in fiscal year 21. I expect Microsoft to be manufacturer of the computing power in the future. So I forecast fixed asset growth to be 20% and gross margin decreased to 67%, and the operating expense keep growing around 5%, showing it great operating leverage. Look at the fiscal year 4Q25, saw a big increase in revenue. You could see that Microsoft revenue rose 18% YoY, but EBIT and net margins show a strong growth of 33%. This due to management controlling a fixed cost. And the Microsoft ROE and ROIC stay high at 30% and 36%, showing great profitability. And the news. One thing that we need to concern is that Microsoft and OpenAI just signed MOU for OpenAI to holding stake on public benefit corporation to raise more capital and eventually become public company. I thought that OpenAI tries to be less dependent on Microsoft. And the second is Satya Nadella just introduced their new quantum computers, and Microsoft just got exploited by some group of hackers, but it's already fixed it. Then we look at constraints to growth for Microsoft are neutral. In the capital side, even with high capex needs, it only represents 48% of operating cash flow and a 95 billion cash holding, negative 58-day cash conversion cycle due to shift to digital business and a low debt of 0.3 DE ratio. These have a high liquidity position, so I expect Microsoft to have just a minor problem with capitals. Look at the operations, it have a major problem. Microsoft needs to keep technological edge. Microsoft relies on a few suppliers with intense competition and antitrust regulation. And about the market is neutral. Windows already having 71% of market share, and Office software hold the largest market share. This showing the Microsoft is already measured in the measured market, but it still have cloud that they have 21% market share and it's a fast-growing sector. But they still face a lot of competition from AWS, Google Cloud, and new entrants like Oracle. And about the people, Microsoft still attractive company to get in. Everybody want to get in because it's high compensation and generous 401k. But recently, OpenAI researcher got constantly recruited by Meta as high as 250 million. It's almost like a soccer player. And let's look at the business breakdown. AI and cloud drive improvement in products and services. Microsoft revenue is visible US 51% and other countries 49%. Productivity software hold the core business of Microsoft at 43%. It includes something like Excel, PowerPoint, and Word that we all use. And the shift to Microsoft 365 subscription create a strong recurring revenue. And the integration of cloud storage and AI integrated improve its value. This also integrated into LinkedIn and Dynamic. Look at the cloud intelligence, 38% of the revenue. Cloud service that are integrated into other products and is standalone for consumers and corporations. And the unique thing about it is hybrid cloud and AI solution. And the last thing that we used to is personal computing, like Microsoft Windows, laptop like Surface, and gaming like Xbox. And they recently added the Bing search engine with the Copilot update. Look at the FVMR. You could say that Microsoft appears neutral compared to 13,000 non-financial companies in the world, ranked slightly below average in terms of fundamental, valuation, momentum, and risk. The thing that put Microsoft down is that fundamental. It's poor asset turnover, and the valuation very high PE and PBV. This leads to the lower ranking. Look at the WCB. Microsoft have a excellent profitability ranked at top 10% among 670 large infotech company worldwide. But there is some room to grow. We need to look deeper. Microsoft have a strong profit margin, looking at the 18% ROA, and is improving its EPS growth with buyback. Now we look at the asset utilization. It's ranked number 8. Company become more capital intensity. That's why it's looking like this. Then the net margin is exceptionally ranked at number 1. And sales growth ranked at number 3, showing good growth, and net margin, they stay flat. Look at the company ESG. The overall score is 60%, with environment at 60%. It has some problem about controversy with data center massive usage of water and energies. But when we look at social, you can see that Microsoft has a great social life and a quality management system that got approved. But when we look at governance, it has something to concern. Even Microsoft have independent board of directors of 92%, but Satya Nadella has been both CEO and chairman of Microsoft since 2014, which is quite a problem. And the reason in 2019 is have Foreign Corrupt Practice Act. That's why governance is at 20%. Look at the profit loss statement. You could see that SG&A is growing slower. In case in last year, headcount is not changed, even the company have a massive revenue growth, which is very cool. And then look at the balance sheet. Net fixed asset is growing very fast to support its AI infrastructure and cloud. Now, look at total liabilities. Microsoft still need a little bit of long-term debt, but it's not that much. When we look at the cash flow, we could see that operating cash flow is cover all the investing cash flow, which easily get great and have a lot of room for Microsoft to invest. And look at the ratio. I expect the cash conversion cycle to improve because its inventory is shifted to a digital, and I think it's going to have more bargaining powers. And the one thing that we need to look at is effective tax rate that at 18% versus 20% US tax rate. This is because the geographic distribution of Microsoft and some government support. Now, look at the free cash flow data. You could see with a shift to capital intensive, depreciation and amortization is rising quite a lot. This support the free cash flow growth to be strong. Look at the valuation. On the forward 2016 price to book multiple, Microsoft is almost in line with the US, but look expensive compared to the world and Asia. I forecast its return on equity to be around 33%, higher than the world and Asia. When comparing PB to ROE, Microsoft is in line with the US at 0.28. But the interesting part is PE. On the forward PE, Microsoft trades at a premium relative to world and US, and significantly more expensive than Asia. It's more expensive 2 times. I expect its EPS growth to be strong in 2026, driven by AI and cloud investment, and a share buyback. With these two considerations, PEG ratio is very cheap compared to world and USA. And now look at my intrinsic valuation. I use risk-free rate of 2.5%, equity risk premium of 9%. I expect its beta to become in line with the market at 1, which leads to cost of equity of 11.5. I expect the capital structure for Microsoft to have 10% debt, so my WACC and a discount rate of 10.6%. And I use high terminal growth of 4%. This drive value of 572 per share based on free cash flow methodologies. In my sensitivity analysis, I want to highlight the gross margin. With increased 2%, the price is driving to 581, and with the decrease of 2%, the price going down to 563, which is likely possible to happen. Now, look at the risk. Software intense competition needs innovation and customer trust. Software and cloud business market are dynamic and are highly competitive. Customers' preference evolve rapidly, influencing users to use the solution that suits them the most. If the company couldn't keep up, Microsoft could lose a significant market share to it. And the next thing is that a shift to a higher fixed cost could affect profit in an economic downturn. Increase its fixed cost in infrastructure investing, need for land, energy, and GPUs. If the company couldn't perform, it could be in trouble. And the cybersecurity risks arise from Windows vulnerabilities, raising safety concern. If Microsoft still have this problem, it will lose a lot of customers. And the Microsoft still face a wide range of US antitrust law. Microsoft is facing with cloud, they're locking their customer up, but they deny it. So now, Microsoft is a fascinating company holding a great technology for the futures. And I have a buy recommendation at 572 with 14% upside. Thank you.
Excellent. So we got some good questions that have come in, but I'm going to start with the first one. If you can go back to your slide on the story, I'm interested in your third story that you had. Okay, so on the third story, I'm going to try to zoom in on this a little bit. Can you explain what you mean by you say operating expenses grow 6 versus 15% revenue growth, as shown by management focus on efficiency? You said investment in cloud infrastructure shifted the company to capital-intensive business, and then you said manufacturer of computing power. And I understand what you're talking about becoming more capital-intensive, and you can talk a little bit more about that. But I'm also curious about to what extent is it doing actual manufacturing, and also to what extent is it doing energy and investment in energy?
Let's go into the manufacturing side first. In my stories, I'm in manufacturing for AI computing and computing powers, and I think they're going to hold a lot of computing power needs in the future, because I have many friends as a developers. They need to use cloud for computing powers. So I just think that the cloud business of Microsoft going to drive them to be a manufacturer of computing powers. And the energy investment, they have some investment, but they try to get a clean energy, but I don't see like a significant thing right now about energy.
Okay, so let's move on to the next one, which is coming from Oman. He says, in the last 6 months, the share price increased around 30%. Why do you think there could still be more upside?
This one is, I think market is not realized its operating leverage power with its fixed cost is very still. And there's a lot of room for cloud to grow that market is not yet to realize. And the price dropped a little bit. So I think it's still growing.
Okay. And we got a question from Pitch, which says, what do you think about Oracle gaining market share in AI infrastructure? Will it have an impact on Microsoft's valuation?
Yeah, about Oracle, they are very interesting. like a company like Microsoft or Google that have a cloud that try to competing with game industry, competing with OpenAI. But Oracle, they're not doing that. They just give in and support all the features. I think with the database, OpenAI trying to shift to Oracle clouds and maybe gaming too. It could impact a little to Microsoft, but I think it's actually still have more features like its hybrid cloud that corporation use, like Nestle, for example, that I use, is moved from their private cloud computing to Microsoft because like it's have very great features there. So I think it's going to affect a little bit.
Okay. And from Roman, he says Microsoft signed a $15 billion deal with Intel to produce custom AI chips for data centers. Will Microsoft compete with NVIDIA in the data center space?
I think this one they will not competing with OpenAI. It's using is they doing it for improve their own efficiency. Or if they get lucky, they could sell to others, but it's hardly that they could like competing with NVIDIA in that space. So
And this question also, this is where I don't know your level of understanding of it, but is Microsoft, this question is a little bit confusing for me. Is Microsoft, they've signed a deal with Intel for Intel to produce the AI chips for data center, right? It's not Microsoft producing the chips for data centers, right? And Microsoft are they doing any internal development of chips or other hardware, or is it only software?
they have the little hardware from Intel, as you can say. They aim to improve its efficiency. From the last year, management said that the AI efficiency is improving almost 2 times with it like producing the hardware stuff, writing its algorithm to be like more efficient. But I don't see that selling to others that much.
Okay. And DP says, if we were to reverse engineer the current share price, what growth and margin assumptions is the market already pricing in? In other words, you've got 15% upside roughly. That is, pretty close to market. I mean, do you think the market is factoring in slower growth than what you're expecting? And what are your thoughts on that?
I think the thing that I factor in is depreciation. It's high depreciation for the futures drive my free cash flow to grow strong. And the market already driving cloud revenue, but I say that the overall business is core business. They are all growing. So I think that is what like market isn't priced in yet.
Hold on one second. I'm going to take that off of the screen. So how does it feel to complete this assignment?
Very fun, very scary, but I think it's worth it. I know that you guys see in my face, I'm looking quite nervous, right? But it's really fun.
It didn't show. You did a good job.
Oh, really?
And yeah. And how would you compare, what you know now compared to when you first started in Valuation Masterclass Bootcamp?
I know a lot more things. It's like very significant to my life. It might sound like oversaturating, but it's real. It's real. One thing that I find it hard in valuation is how to make a right assumption to find why this number is going to be that numbers. Why is this happening? This is what I struggle a lot, and nobody teach this of why. Think about why. Yeah.
And how did your thinking on that develop? What did you learn as you went through? How did you learn to start to think about it? What was the tools or the assignments or the activities or the feedback, or what was it that helped you to develop that?
The video that you give and the assignment is pushing me to research more, understand why more. And if you look into your class, you take a tool and thinking about why is this happening? Why fascinal revenue is dropping? Why is it increasing? This is what developed me the most. And having a great friend here, they support me and push me.
Yeah.
And thank you, Moment, that always helping me.
Yeah. Let's see some of the nice comments. Moment says, "Way to go," and Lee says, "Outstanding presentation."
Oh,
My
thank you.
good friend Hillary in Nigeria said, "Really great job, Super Kid."
Thank you.
And also, Pitch says, "You are really great."
Oh, thank you.
Yeah, and great job from Roman, who's in the U.S., and one of our students. And Tanachot says, "Good confidence going on live." And DP said, "That was good, Super Kid." And yeah,
Let's
so
go.
yeah, way to go, way to go. So we are going to end it there, but well done, and then we're going to do another one in just a bit. But relax and enjoy the next show. And meanwhile, I'll see you in the Slack channel. Hold on. Well, that was pretty amazing, don't you think? Remember, that's a student's presentation who didn't have all those skills at the beginning of the Valuation Masterclass Bootcamp. That student's name is Subakit. And remember, if you want to build a competitive advantage in company valuation like Superkit, then join us in the next Valuation Masterclass Bootcamp coming up in 52 days. You can get a $1,900 discount right now from watching this. Just use the discount code BC22 live for 7 days. Scan the QR code or go to the link. My name is Andrew Stotz, and I hope you learned something. And more importantly, I hope to see you in the next Valuation Masterclass